Well, good morning, everyone. Good morning, everyone. It is Monday, July 6, 2026. It is so good to see you all this beautiful and awesome Monday morning here in Austin, Texas. Y'all, we watched fireworks downtown Austin on the 4th. It was great. It was awesome. Just, 150,000 people, but we found a great place to watch, and it was a blast. The drone show was kind of all right. It was kind of mediocre. I was a little bit disappointed with the drone show, but the fireworks were great. I thought the fireworks were great. The finale was great. Traffic was terrible, but great time. We do have a magnificent, beautiful city, especially at night. I mean, our city is so beautiful at night. I took some really good pictures. Take a look at these. I mean, look at that. Isn't that beautiful? I mean, we live in such an awesome, beautiful city. Look at that. I think it's just gorgeous. I like that one. That's probably my favorite one. So really excited to see you all this morning. Lots going on, lots to go over. Obviously, Monday morning, we do our famous new listen to pending ratio, the single best leading market indicator available for our market to see what's going on with inventory, what's going on with everything. And then we're also going to take a look at the bond market, what's happening with rates. Keep in mind that every time the amazing Robert sends over the rate sheet, I update the mortgage rates tab on resources.teamprice.com. We can see that we're at 6.5% conventional, 30 years, 6 1/8 for 15 year. Same thing, 6 1/8 for FHA, VA, USDA, and then 6.375 jumbo, 7.125 on conventional, 25% down. Now, this week, when it comes to the economic calendar, we can see that some data was released here earlier today, not that long ago. And this is the Institute for Supply Chain Management. A little bit softer than expected on the Purchaser Manager Index, a little bit harder than expected on pricing. So that is inflationary. Way better than expected on the employment side of things. So that is good. That green right there is good. That green is not good in my opinion. I want prices to go down. I would love for us to be in a deflationary economic condition as opposed to inflationary. Tomorrow, we've got economic optimism. That comes out at 9 a.m. Going into Wednesday, we've got a lot of mortgage information coming out. That always comes out Wednesday morning. A lot of commodity data, more so on the oil side of things. We do have the Federal Open Market Committee meeting minutes. That comes out at 1 p.m., 1300 hours, also known as 1 p.m. Thursday, we've got existing home sales. And then going into Friday, we have oil rig. We've got some energy report, a little bit of a calm week this week. Next week, on the other hand, is going to be the very important week. We're going to start off on Monday with the federal budget balance. That's irrelevant. It's going to be negative. We're basically in debt. And then on Tuesday, we've got small business optimism going into inflation. That's going to be CPI followed by PPI on Wednesday. And then we've got pending home sales. National Association of Home Builders Housing Market Index, 9 a.m. on Thursday. That is a summary of 3 components that they track. The most important one is going to be the walkthrough, new home buyer walkthrough. They keep really good track of that. We update the resource that we have on Insight and Statistics with that information. That's going to be released Thursday. And then going into Friday, we've got permitting data, pricing data, in consumer sentiment, consumer expectation. We do have a Friday meeting this Friday. So this is going to be the packed week. We've got our Wednesday broker Q&A training, and then our Friday meeting. So please be sure to join us for our Friday live meeting. We do a 9 a.m. focus group. We call it a mentorship focus group. And then at 10 a.m. is going to be our Friday team meeting. Be sure to join us for that. We are continuing to talk about the contract changes, making sure that we are all aware of the pretty meaningful contract changes that we've had. Keep in mind that we are still waiting for some of the forms to be updated by the Texas Association of Realtors. And then If you have noticed over the past few days, as they updated all of the forms within Transaction Desk, the signature fields and the initial fields don't match. What they did is they just replaced one form for another, and they didn't change where the signature and the initial fields are. Last night, I had to do an amendment to a listing, and when I added the amendment form, I had to just drag all of the signature fields to the right place. So I am reporting all of that. So if you do come across a form where the fields don't match, send me the screenshot so that I can then send it to them and report that as a form that has to be modified and it has to be corrected. They went the super easy route. They didn't verify. So there are a lot of mistakes within the forms within Transaction Desk, which drives me insane. But that's what we are noticing. So please send me the screenshot. Jeff just said, I have seen that. Yeah, it's an absolute pain. Let's go ahead and get started with the new listing to pending ratio. As you know, first thing we do is we go backwards in time a little bit and we modify anything that may have to be modified. So this is going to go from 577 to 578. Let's take a look at the pending. And that's going to go from 362 to 367. Let's go back 1 week from the 15th to the 22nd. That stays the same, 8th through the 15th. This does change to 517, 1st through the 8th. That's going to be 530. I'm just going to go 2 more weeks just to make sure that all the information is updated. This is going to be 578, 18 through the 25th. That's going to be 545, which means we're going to go 2 more weeks. Whenever I have 2 weeks where I don't have to change the number, then we just go on and start updating this week. 4 through the 11th, 572. Let's see if we have a second week where we don't have to update it, 606. So now we're all good to go. Now, let's go ahead and just start updating this week from the 29th to the 6th. Expect new listings to go down by quite a bit. I doubt it's going to break 1,000 because of July 4th weekend, especially it falling on a, Saturday? Yes, falling on a Saturday, and then July 3rd, Friday being a national holiday. And we are right, this is going to be 947 new listings came on the market leading up to right now. Let's take a look at price increase. We're at oh, wow. What in the world? 426 price increases. That's going to be new construction. This, my friends, we have to go back. Okay, so let's memorize this number, 426. When was the last time we had a price increase that beat 426? Whoa. We are back 2 years. 426 price increases. Y'all, we're back 3 years. 412. So that's not even that. We're back 3 years. 426 price increases? Is this a new record? I'm going back to 2021. Yo, this is a new record. We just hit a new record. 426 price increases in the past 6.5 days. Was this real? All right, we're going to do a little bit more research on that. Let's make a note because I'm going to take a look at those price increases. It's got to be like 95% new construction. That is crazy. That's an insane number. Oh, interesting. Price decrease. Well, that goes down 1679. So look at that, 80%. When was the last time we saw 80%? 80%, we have to go, okay, so we're 71. So we have to go back to 2025, December 30th, 24, January 6th, 2025, 71%. So we're at 80%. That's going to be the ratio out of everything that could have gone up or down in price. What percentage went down? 196 back in the market, 21%. That matches the previous week. Active under contract, not a bad number. I'll take it, 348. Now you get to guess. I need 5 people to go ahead and just put forth your guesses on how many pendings from June 29th all the way through right now, July 6th. Keep in mind that pendings tend to be a little bit on the lower side of things. And as you saw when we updated the previous weeks, agents will go and update those pendings over the next week, 2-3 weeks. And we're starting off with Melanie Price at 180, Bertina at 199, Austin Bishop at 244 3/4. Seth coming in at a little bit of a bearish 189. Ryan following with 196. Let's go ahead and click on this number, and we are at, okay, Ryan wins. Ryan wins. Oh, no, wait. Yeah, Bertina went over by 1, so she loses, unfortunately. 198. 198. We're starting off the week at a 0.48. Last week, we're at a 0.62. Let's do the comparison. 2 weeks ago, 45 additional new listings. We have been on a 5-week streak where new listings are higher than the same week last year. We're down by only 38 so far. Will 38 new listings come on the market between now, 10:17 a.m. and 11:59 p.m. tonight? The answer is yes. 100%. We are going to have 38 new listings come on the market in the next 13 hours and 43 minutes. That absolutely will happen. So we're going to be on the positive. We're going to be 6 weeks in a row positive. We're definitely positive on the price increase. We're up by 146 on the price increase, which is huge. We're down 187 on the price drop. So that number shrinks. We're down by 59 on back on the market, and we are down a cumulative 431 on properties under contract. Last week, we went negative. We're down 152. So last week, meaning 2 weeks ago. So we're down 13.9% on properties going under contract 2 weeks ago. That's that slowdown that we spoke about last week, which is, hey, things have slowed down just a little bit. We've got more new listings entering the market, and we've got just a tad less properties going under contract, which is contributing to the ratio being down by 16.4 2 weeks ago. That's not going to go positive. There's no way. So we need an additional 152 properties to be changed or labeled as under contract in the next 2, 3, 4, 5 weeks for it to go positive. I do not see that happening. That's a really big gap. It's going to shrink by a good 100. So it's going to end up being negative by about 52 or 50 properties or so. So it's going to be negative. It's going to be single digit. It's not going to be as high as a drop in the new listing to pending ratio at 16.4%. But it'll be a drop. It'll be a drop of a single digit drop. This continues to be negative. So the first week of June, we were negative 2.8%. And that, to put in perspective, a slowdown of 2.8% on this new listing to pending ratio, and this is the analogy that I like to use. It's like going 75 miles an hour and slowing down to 74. It's not noticed by anyone around unless you're staring at your speedometer. But no one is going to notice it. Your passengers will not notice it. The big question is this slowdown going to be sustained over the next few weeks? Now, we are entering that cyclical portion of real estate. The market is cyclical, where between now and October, November timeframe, things do pull back. So if you do have a listing and you're saying, wow, things have certainly slowed down for me, what do I do? Do I do a price drop now? Do I wait? You do it now. Like you do it now. Now, we are noticing this little bit of a pullback because we analyze this data faithfully, consistently, obsessively to a certain extent. So we're noticing this pullback in demand. And when you take a look at the activity index on the resale side, under 18%, you're going to say, okay, things are definitely pulling back a little bit. I attribute that to 90% just the cyclical nature of Austin real estate. We have a very short selling season. The market tends to peak in May, might go into the first week of June. After that, it pulls back, and it pulls back fast. And then we have a pickup in December. Decembers are really good months, but between now, meaning closings in December, are always better than November. We always have a peak in December, meaning that activity starts improving towards October, November timeframe. So if you do have that listing that all of a sudden fell out of flavor, address that immediately. Address that right now. That's my recommendation. The other thing that I've been doing, and it's been quite successful, and this is not broker policy. I'm not telling you to do this as a broker policy. You've got to weigh this decision based on your relationship with your client, what's best for your client. But I've been doing 3-month listing agreements. I've only been doing 3-month listing agreements. And then, like, for example, I've got a listing that, unless I get it under contract, will expire at the end of August. August 31st, it'll expire. I've had the discussion with my client. We will then relist it with a price improvement, with a marketing refresh. I'll even take brand new pictures. I'll do a different type of staging. I'll do another push, and then we will do a price improvement with a new listing, with a new marketing push. And we'll do that 3 days after it expires. I'd rather do that because if you withdraw a listing, you can't relist it for 30 days. So I want that fresh outlook in the market with a price improvement. So I've been doing 3-month listing agreements. That strategy has worked very well. Now, some of the things to consider. What if the client doesn't re-sign it? What if, whatever, right? There's a lot of things for you personally to consider. That's why it's not a broker policy. It's a strategy that is dependent upon that specific market, what's best for your client, what kind of relationship do you have with your client. So a little bit of a slowdown. We just have to keep track of this faithfully as we do. Let's start taking a look at the month. The month is going to be all over the place, you all, because we're only 6 days into the month and a major holiday. So don't take a lot of stock on what's happening right here so far in the first 6 days of the month. This is going to change to 2205. And then a pending is going to change to 1748, which means 0.67, lower than June of 2025 at the 0.72. We did see a lot more listings come on the market in June. 5,024 new listings entering the market last month compared to 4,539. Let's take a look at the number of new listings that have entered the market here so far this month. And we're at 689. Not bad. Actually fairly healthy given the fact that we're only 6 days in. We've got 347 price increase. We've got 1059 price decrease, 75%. So a lot of those price increases happened into July. And we're going to dig deep into this to see where's that coming from. I would say 90. I'm just going to throw a number out there. 93% are going to be new construction. That's going to be the number that I'm going to throw out there. Back on the market, we're looking at 145, 21% back on the market, matches year over year. 204 active under contract, and only 101 pending. But once again, I mean, who was showing properties on Saturday? No one was showing properties on Saturday. So don't take a lot of stock on this 0.37 number. It's really, really early on. So we're just going to have to, a more accurate reading will happen in the next 7 to 10 days. Next Monday, it'll be a way more accurate reading. This number is going to shoot up to the 0.5s and then constantly improve. And on the withdrawn so far, we're looking at, 126, not bad also. And then so far expired, only 61. Very few properties expire in the first week of the month. Let's take a look at the year-over-year comparison. Here we've got active. Let's focus on June. Forget July. Pretend like July doesn't exist. Active, down 4.7%. Less inventory today than we had a year ago. New, up 10.7%. Now, look at all the negative numbers that we've had before. So when you look at August to June, or let's just say July to June, we are negative 206 new listings entering the market. Back on the market, on the other hand, we're plus 403. We're plus 403 on back on the market. So we are outperforming last year on back on the market, which is really interesting. On the pending side of things, we're up 2127. Way more pendings this year compared to last year, which is really, really good. On the percentage side of things, it's an average 4.4% increase on the properties that are being absorbed by the market. On the sold, we're up 817. This is a better year compared to last year. The data absolutely proves that. Now, on the withdrawn and expired, we're up 2212. So we've had 2,212 more properties expire this year compared to last year. So we're seeing more and more properties just leaving the market. So let's go ahead and just save this. You will get a copy of this as a PDF on your recap email later on today. And let's take a look at the daily briefing that we create every single morning. We are down 573 active listings compared to the peak of last year. We're currently at 17,573 active listings currently in the market. The previous high was 18,146, down 573. The big question is, are we going to break last year's peak of 18,146? Once again, we're down 573. And last year, we peaked at June 30th. So we're past that. We're July 6th. 2 years ago, the market peaked July 15th. So that's 9 days from now. Could we add 573 active listings on the market in the next 9 to 15 days? I would put the probability of that at 75%. Now, I would say, we are noticing a pickup in new listings entering the market these past 2 weeks, especially on the back of the market. What could tame this and hold this back are the expireds and withdrawns. Now imagine if we would have had half of the properties that were withdrawn and expired stay on the market, or just the withdrawns. If we would have just sellers say, okay, I'm just going to hunker down and keep on going, we would have already beaten last year's peak active listing count. What's keeping that down is the fact that we continue to see more and more properties being taken away, the quits of the market. 52.3% of all active listings have had a price drop. You can see that active listings, we are down only 0.98 year over year on the number of active listings. Today, we've got 17,573. In this same day last year, we had 17,747. So it's only 0.98 difference. Pending listings. This is the good news. We are up 7.4% on the pending side of things. Now, we did get up as high as 11%. So we are noticing a backtrack on that percentage pending. Last week, we got as high as 11%. As a matter of fact, let me go ahead and just pull this up for you so you can see. This is going to be on your active residential listing. And look at the pending. We got up Wednesday at 11.1% year over year increase on pending listings. That shrank down to 7.4. Still great. Still very, very healthy. Now look what's happening with the month over month. Month over month is decreasing. We're plus 406 month over month. Now week over week, look at the week over week change. We were positive, every single day, week over week, from June 8th all the way to Tuesday, June 30th. And then we went negative week over week on the number of active listings. The big question is, how many listings will come on the market Thursday and Friday from people that held back on listing their homes because of July 4th weekend? We could very well see an additional 200 to 300 additional listings on the market. Let's go back to your daily briefing. And because of the pending and because of the active, the activity index is up by 6.7%. Here's the resale though. Resale under 18%. We all know what happens at that 20% mark. That 20% mark is the danger zone on the activity index. And this is the number that you have to be absolutely obsessed with, is the activity index. Working with buyers, working with sellers. And let me just go ahead and show you how important it is for us to be obsessed with the activity index. Here's the activity index resource that we have for the top 100 neighborhoods in the area. And let me just pick, I'm just going to pick Avery Ranch. Here's Avery Ranch, and let's go ahead and take a look at it. And then I'll pick a few other ones. So this is a great example. Avery Ranch Activity Index, 4 to 450, 18.2, not great. 450 to 5, 50% activity index, sweet spot, amazing, incredible. Then you go into the 5 to 550, that collapses down to 14.3, months of inventory over 3 times higher than the 450 to 5. So if you've got you get up to the $600,000, forget about it. You have no activity. It's everything that's active is active, nothing's pending. It does improve between the 650 to 7, but that's because you only have 2 listings. And then the 750 plus, also low. Now, you've got a low months of inventory. What does that tell us? Leading versus lagging indicator. A low months of inventory shows us that over the past 90 days, a lot of property sold in relation to what's active. But the activity index under 20% tells us what? A cautionary danger zone. A future months of inventory will actually go up because if a property doesn't go pending, it doesn't close. So this is one of those areas and pockets where if you're not obsessed with leading indicators, you're very frustrated. You're saying, what the heck? Those properties sold 3 months ago. Those are really good comps. How come I'm not getting showings? Well, because you've got to be obsessed with that activity index. Let me pick another one here for you. I'm going to go to a neighborhood that I'm very familiar with, and you tell me what's going on in this neighborhood. Look at that. You've got amazing activity index on the lower price points. I would even put 28.6 as a really good activity index. Yeah, 25%, you get into the neutral market. So this is going to be like that neutral plus, that warm plus market. Y'all, we cross into the 350. You can't give the sucker away. There's no activity. Between 350 and 475, there's nothing going on. And that's the bulk of the market. That's the highest concentration of inventory, the 34. Out of the 34 listings that are available on the market in the subdivision, we've got 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 18. 18 out of 34. There's no activity. 0. So if you've got a listing right there and you're priced at $425, you might lower it to $399 and it might be crickets. That's the challenging situation. That's why I do the 3-month listing agreement, let it expire, come in fresh, new marketing, new pictures. Is it going to cost you marketing money? Absolutely it will. Does it work? Yeah, it does. So be obsessed with the activity index. Be absolutely obsessed. Y'all, look at Orchard Ridge in Liberty Hill. It's going to be the last one that we take a look at. Because, oh my goodness, look at that. I mean, there's nothing. One property, let me make this a little bit bigger for you all. We've got one listing at 250 to 3, and you've got one pending. Everything else, there's nothing pending. Like there's nothing. Can't give it away. There's nothing going on there. 5.6% activity index. Absolutely terrible. And then you've got Shady Hollow, man, killing it. 50% activity index. See how bifurcated this market is on demand. I mean, Stonewater, Manor, I could just look at this information all day long. Oh, my goodness. Look at that. I mean, 10% activity index, 250 to 3. 0 activity index, 3 to 350. 0. 10.3%. 0. So you got to be obsessed with this. You've got to be obsessed with your leading market indicators. The zip codes that are doing well, these are going to be your recession-proof zip codes, 3956, 28, back up on the 35%. 28 had a little bit of a pullback under 30%, back on the top 5. Good to see that zip code back top 5. That's going to be your Wells Branch area. 49 doing well, 33 doing well. Not one city is over 25% activity index. Very much cyclical in nature. And let's take a look at how fresh is the market. 1/4, 25.1% of all properties that are currently on the market did not exist 30 days ago. So 1/4 of the inventory out of the 17,573 properties that are currently on the market, 1/4 did not exist 30 days ago. The other impressive number is the pending. We've got 4,625 pending properties, 566 of those not went pending in 30 days. That's not what this number means. It means that 12.2% of all the pending inventory, the listing did not exist 30 days ago. Not it went pending. It wasn't even active on the market 30 days ago. And the median days on the market for these 566, 6 days. So what does that tell you? The good ones, the perfect ones, the ones that are priced well, they look good, they look absolutely amazing, they're getting snatched up in no time. And then you've got everything else. And 25% of the market, you're not going to be able to give it away. It's just, there aren't enough buyers to absorb at least, I'd say even 50% of the market. And how do we know that? Well, we know that because we have a chart for that. There are 2.7 sellers for every buyer that's available right now pursuing real estate. In some areas, it gets as high as 4.2 sellers per buyer. And then in other areas, it gets down to like that 1-to-1 ratio, 2-to-1 ratio, more of like that balanced market. City-wise, there's no market that would be considered hot. Zip code-wise, there are 3 hot zip codes in the area. So this is really important. This is actually a resource that I went over with someone talking about the bifurcated nature of demand within Austin real estate. Is that you could be looking in a very hot area, the 78749, the 56, it's a 1-to-1 match. There's a seller for every buyer in that zip code. And the 39, there's 1.3 sellers for every buyers in that specific zip code, that super hot zip code. And you're not going to have any leverage there. And then you go over to some of the areas where it's more of a balanced market, or even a cool market, and of course, a cold market. 8% of the 75 zip codes that we track, cold. It's a cold market. Way more sellers than there are buyers. You could eliminate 50% of that inventory. You can't give it away, not because of pricing. Some of it might be functional obsolescence. Yeah, that's something that the seller can't change. And the competition is so fierce that everyone's got a good price, or 20% of the properties are priced well, right? It becomes almost a fire sale, but then even properties that have functional obsolescence items associated with it, bad floor plan, funky floor plan, it doesn't matter. A buyer's going to say, oh, I don't care if you lower it $50,000. I am simply not interested in that property. And it only changes when inventory shrinks and now the buyer has no option. So something to be really, really aware of. Let's talk about months of inventory. We are down 3.9% year over year on inventory. And of course, not every city, not every zip code is the same. The range in inventory is drastic within our area. On the low side, zip code 1.89 months of inventory. That's going to put you at the super hot market. And then all the way to 15.5 months of inventory, or even 78705 at 13.41 months of inventory. And then even within the months of inventory category. The lesson for us in real estate is really being, hyper local, hyper specialized in inventory, because we can see that different price points, and let me go to the zip code side of things, different price points will show you different months of inventory. So I pick a lot on 78705 zip code, but you can see that even though we've got a 12.67 overall months of inventory, what does that mean per price point? If you're at the 700 to 900,000, not a bad deal. You got 3 months of inventory. You're at the 4 to 5, you got 72 months of inventory. That's like a car payment length inventory. That's brutal. Can't give the sucker away. Turn it into a rental, right out the market, or fire sell it. If you're right there, you've got to bring that under the 400,000, regardless of what the data says. You might be looking at that saying, no, Dan, you don't understand. It's worth 475. I get it. On paper, it's worth 475. You want to sell it? 399. Right? Well, my client doesn't want to give it away, so then keep it. Well, they don't want to keep it. Okay, terminate the listing. Well, what do you want me to say? Right? The data shows us that the demand stops at that specific price point. You either bring it under that price point and give that buyer that value that they're desiring, or just take it off the market, ride it out, wait 2, 3, 4 years, however long it takes. 78722 bounces all over the place based on different price points. So that's why we update this resource, so that you can look at your specific price range within your specific zip code and give your client, the buyer, the seller, the advice that they need to make a decision. Year over year, 53.3% of the cities that we track have less inventory. 43.3% have more inventory. Bastrop, exactly the same. July 2025, 6.61. July 2026, exactly the same, 6.61, which is really, really interesting to see it that way. When you look at the 2-year comparison, 20 out of the 30 higher, and only 10 have less inventory compared to 2 years. Austin is doing very well. Months of inventory down a pretty substantial 19.21%, and within a 2-year period down a significant 13.2%. Let's talk about sold. Cumulative sold, this includes our July projection. We're looking at a 4.1% year over year gain, which is fantastic. So that puts us almost at the 2023-24 number of sold. I would say that when this is all said and done, we will actually beat 2023-24. So we are in the trajectory, looking at the improvement in sold properties, to have the best year in real estate in the past 4 years. I get that we're in that trajectory. And unless things dramatically change here, that's the trajectory that we're heading. The really good news is that we are already there on the number of sold properties per 1,000 realtors. The number of agents, it's been dropping. We know it's been dropping. Some of you might have questions on, well, how many agents are there within the Austin area? Let's go ahead and pull this information up. There are today 17,858 agents currently in the Austin area. It peaked September 2022 at 21,276. So we're down 16.07. Last time we had a correction, it was down 28.9%. The thing that happens, and this chart really explains it, is that as the market improves, you can see the red number of sold properties, the blue number of realtors. Last time, the number of sold properties bottomed out 2009 and started improving. But the number of realtors didn't bottom out until when? Until February 2012. So 3 additional years where agent count suffered, even though more properties were closing. What's happening this year? The same thing. So we bottomed out on the number of sold properties, kind of 2005-ish or so. We're hoping that this improvement is sustained. I'd say it is sustained. I'd say it's going to be nearly impossible for the market to drop below that $400,000 median sold price that we saw January of this year. Like, it would be incomprehensible for us to experience like another 10% pullback. Things are improving. Started off the year saying I'm very bullish for the Austin market. The data is pointing in the right direction. That continues to be the case. And the number of agents continues to drop because there's that lagging effect that happens within real estate. And you want to get to the sweet spot. The sweet spot is where the market has been improving for 2 to 3 years and the number of agents is at a low. That sweet spot creates this little pattern. 2012, 13, 14, best month ever for agents on the number of sold transactions per 1,000 agents was July of 2014. Those were the agents that survived the 2008, 9, 10, 11, 12, and they reaped the spoils of war. And we're setting that up. That is the scenario that's being set up right now. Look at the 146. It beats out 142, 143, 139, 138. So the agents that could not survive the 2012, 22, 23, 24, 25, they're gone. Less agents are joining the business, and we here who are left are reaping the business that's out there. So this number is improving. This is really, really encouraging for us. A 9.8% year-over-year increase on the number of sold properties cumulative per 1,000 realtors. That's fantastic. That's good. The question is, are we going to be 2022? That was 1,084. And I'd say yes. I'd say as we update this information, we're going to have to wait until October, November timeframe because this is cumulative. I would say that we're going to be 2022. So we're going to have the best year in 5 years in real estate on the number of sold properties. And yeah, can you look at Dan, we're still 16.3% below average. Of course, I get that. It's a slow recovering market, which is the healthiest type of recovery. When you look at sold prices, we had an excellent June. June was fantastic. Prices up 4.8% on the average month over month, 5.6% year over year. There's that $400,000 bottom of the market right there, $400,000 January. I just don't see January 2027 being lower than 400,000, you all. I just don't see that. As a matter of fact, someone might want to put like a note. Well, will you look over this information all the time so you don't have to make a note of me saying this today? I just don't see it. I would say everything. I mean, look at that. From January of 2026, plus. And these are solid numbers. Year over year, that is shrinking. We're now positive $5,000 year over year on June. I mean, we're way positive so far July. Inflated number. Don't trust this number. 9.2%. You know it's going to go down. It was like 7% at the first week of June when we were updating this information. More expensive homes sell in the first 15 days of the month compared to the last. We all know that. So don't trust that number. It's good for us to see that number because we've been doing this long enough to see the correlation and causation effects. But this is good. It's going to be positive. Whereas last year we were negative. And things started deteriorating all the way down to $400,000. Whereas January 2025, it was $409,000. And that seemed like, oh my goodness, that's just so unbelievably low. And then it hit $400,000. I don't see us going south of $400,000, not in our area, not with the jobs that are happening in our area, not with the development that's happening in our area. Sold to list price ratio, totally normal for us to see a drop in the sold to list price ratio as it peaks in May. May tends to be the peak, April, May timeframe. That's when the sold to list price ratio tends to peak. It then backtracks, slows down all the way to December. So this is normal to see us 97.55 down to 97.49. But the 97.55 is better than the 97.24 for the previous year. 97.49 is better than 97.15. So we're looking at these across the board improvements within the market. Concessions, we're noticing less concessions being offered. The degree of concessions, builders are offering less concessions in a lot of different areas. Once again, real estate's going to be hyperlocal. We have to keep that in mind. So far this year, median price is down by only 0.4%, only $1,591. And this is all of the 16,292 properties that have closed so far this year compared to the 30,695 that closed last year. The year is halfway over and we're down by only 46.9% on the number of closed properties, which means that we could very well beat last year on the number of closed properties. So that's going to break that negative 2.2% that we saw 2025. The average we're up, and that contributes to that famous word that you hear me use all the time, which is the bifurcated nature of the Austin market, where the top tier of the market, the top 25th percent of the market, does historically outperform the bottom 25th of the market. The good news is that the bottom 25th of the market is now flat. It's exactly the same price. The 50th percent of the market is going to be your median price, right? So you take all 3,000 properties. What's that middle property? That's going to be your median. And then out of 3,000 properties, you take the first 25% and you draw a line. What's that price? Last year was $325. This year is $325. Then you go the opposite side of that and you say, okay, well, what's that top 25th percent of the market? And you draw a line and you compare what's the price. That's up 8.9%, which is really amazing. Now, one of the resources that we do publish that I love, it's a little bit hard to read, but that's okay. We are used to hard graphs to read. It's this one right here. This one plots the 30-day sold comparison year over year across all percentiles, absolutely everything. The first column that we have is, okay, pricing. You take a 30-day snapshot, what property sold for in the past 30 days, and then you take the same exact length of time a year ago and you look at what's happened with price, up or down. And this is the median. The entire market is up 3.3%. Austin is up 8.1%. And you see how it matches the 8.1% on the median? That's the median. And then you look at every single percentile. So the bottom 5th percentile, Austin is down. So the percentile that had the best price increase year over year was the 80th percentile in the city of Austin. Now, the cool thing is that we have this for cities, we have this for zip codes, and this is going to give you like, okay, is there any price point that's like super hot or that is struggling, that's just down? Del Valley, down across the board. Every price range is down no matter what. 7741, it's all down across the board. So this gives you like that really good snapshot. Now, the cool thing is that this information, which is really hard to read, hard to go over this information with clients, I totally get that. What we've done is we've made that same data available on the appreciation chart. So when you print out your zip code stats, when you're going to a listing presentation, a buyer presentation, and let's go to 787, let's go to 22, and let's make this a little bit bigger. When you look at that, when you look at that percentile, it just shows you that. So it's just right there. So right here, I can see that we're negative across the board except for the 500 to 637. That immediately tells me that demand for that price point is stronger. So from 500 to 630, you've got good demand. Good demand means pricing goes up, and then it just slows down. So this is a really good resource to use just to see where is demand concentrated within that zip code. This column, 30 days sold change, that right there is extracted from this big sheet. So if you want to look at everything, you go to percentile analysis. But if you're like, I don't want to look at the whole thing, I just want specific to my zip code, my city, that's already built into the data and analysis resource that we update every single day. Let's keep on going. So top 25th percentile doing well. Appreciation. 8 cities are up in price. Austin being one of them, up 0.2% year over year. And that's going to be the median sold price compared to last year. Now, you might be saying, wait, you just told me that pricing was up by 8.1%. Here's the difference. 8.1%, it's what sold in the past 30 days compared to the same block a year ago, right? So because we know that prices tend to go up during a season, go down. So we take apples to apples comparison, same time, 30 days ago compared to a year 30 days ago. This takes everything that sold last year, the median price of everything that sold last year, compared to the median sold price of everything that has sold so far this year, year to date. Everything, January, February, March, April, May, June, July. Whereas 2025, January all the way to December. So that's the difference. Okay, the 2026 number is capturing January, February, March. That's why the number isn't the same. We're capturing different pieces of data. So when someone says, is the market up or down? I'm like, what's the start and end point? Oh, from the peak. Peak month or peak year? Peak year. Okay, here's the data. Well, what about peak month? Well, okay, you could have one zip code that peaks in May, another zip code might peak in June, right? So it's what's the starting end point? Now, whatever the client wants, we've got the data. It's just where do you want me to start? Where do you want me to end? And let's take a look. We already went through this one. Absorption ratio, that has improved, and that's really good. We beat last year's absorption ratio. That's going to be your sold divided by active. We're at 19.4% right now. Last year, and this is for the month of June. We're not going to update July until the last 5 days of July. But we are up in June. That's really good news. And then we've got one of my favorite ones, your market flow score. This is going to be if you want to summarize all the data points that we track, thousands of data points, 2,500 pages of data into just give me one number. Where is the Austin market right now, 0 to 10? Just rate the Austin market 0 to 10, taking everything into account: demand, velocity, absorption, days on the market, price drops, sold to list price ratio, turnover, new list independent ratio. We are at 5.22, slightly under June, but we're still waiting for pendings to be added to the system. We're still waiting for solds to be added, right? Agents are really bad when it comes to reporting sold, when it comes to reporting pending. The fact that we're so close to the 5.34 means we're going to beat it. And that is really crucial for us, because that's going to mark 1, 2, 3, 4, 5 months in a row where all of the conditions are better year over year. That is the very definition of a market recovery, where you have a sustained improvement year over year. A sustained improvement year over year when you take all of the data points into account. So that's really good. That's good news. That's great news for the Austin market. Rates are steady. What's happening with the bond market right now? We're up by only 1/10 of a basis point, basically nothing. We are not that close to a repricing line. So we've got steady rates. People are used to these rates. Let me take a look at the mortgage data really quick to see where were we with rates. Yeah, we're certainly better. I mean, we've got better rate conditions for the month of July that we've had in the past, going all the way back to 2022. 6.43 is better than 6.72, better than 6.85, better than 6.84. So anyone who's buying right now and you quote them a rate of 6.5%, 6 1/8, 6 1/4, these are the rates that they've heard and seen now since September of 2022. So these are now the normal rates. So we are not, and we have not gotten into the sevens, which is really, really good. We've just been bouncing around, right? Last time we got into the sevens was 2023. Since then, it is trending lower, and that's really good news. Really, really good news. And that right there, you all, concludes our daily briefing. Any questions, comments, concerns, criticisms, complaints? That concludes our daily briefing. Want to remind you that we do have our broker Q&A training on Wednesday. Be sure to join us on Wednesday. Same thing over Zoom at 10 a.m. And then we have our Friday meeting. Be sure to join us for our Friday meeting, 9 a.m. focus group. And then on 10 a.m., we actually have our team meeting. If there are no questions, comments, concerns, criticisms, or complaints, you all, thank you all so much for joining. Super appreciate it. Be on the lookout for a summary of this meeting. Is the focus group online? We haven't done it online. I don't mind getting it set up online. So I don't mind getting that set up online. I'm happy to just launch the Zoom. I won't record it, but I don't mind making the Zoom meeting kind of available. So I'll go ahead and do that. Good stuff. That's a good, yeah, I'll do that. I'll make sure that that's available online. All right, you all. Thank y'all so very much for joining. Super appreciate it. Hope you have an excellent rest of your day, and I will chat with you later.